What's good, everyone? I'm back. Little hiatus on the YouTube, but here we are, back with another video for you guys. This time, talking about structure. So, yeah, super basic initially to start off with in this video. Just going to be looking at lows, highs, higher lows, etc. But yeah, I'm going to move on to all of the rules that I use to map structure with down here. Well, it's only 3 rules, but yeah, we will get right into it. Effectively, structure is kind of the key framework for understanding any market. Price moves according to structure, and it's kind of the ground level understanding of how and where price is going to go. So like, for example, if we're in an uptrend, which is what we have here, we're seeing highs broken and lows staying intact. So these lows are staying intact, and we're seeing the highs get broken. So in this case, yeah, we're in an uptrend, and we obviously have protected lows and weak highs. So what you're trying to do in an uptrend is effectively get involved somewhere down here, or when we're continuing up, to target this weak high. Yeah, and then vice versa with a bearish trend, we're just seeing lows, lower highs, lower lows, lower highs, lower lows, and exactly the opposite of a uptrend, we're just seeing highs get respected and we're seeing lows targeted. So in this case, you're basically trying to do the opposite, and you're wanting to get involved somewhere either at the lower high, or once we've started moving away, you're trying to get involved somewhere along this bit of price to target this low down here because it's weak. So yeah, that's kind of the very basic theory behind structure. Now, yeah, I'm sure kind of most of you will actually understand what structure is. So if you don't, then there's plenty of videos out there, but that was like a brief overview, and I'm going to get into my rules now. So yeah, we will start looking at some price. So, right, when we're looking at structure, it is fractal. So what I mean by that is it's the same on any time frame. So here I'm looking at the monthly time frame on Euro USD, and we will see this on any time frame. So I've got the monthly right here. If I drop to the weekly, we'll see it's slightly different. We're just seeing it in like a higher resolution, effectively, bit more data. And then same again on the daily, you can see the same thing but just in a higher resolution, and there will be different structures per time frame. So yeah, when we're looking at different time frames worth of structure, it's important to understand that the higher the time frame, the more important and pertinent the structure is. So monthly structure is more important than weekly structure, all the way down to 1 second structure, for example. But we use the lower time frames to effectively get early confirmations that the higher time frame might be shifting in the direction of the structural objective, effectively. So yeah, right, so if we look on the monthly time frame, we can see that we have one big impulse to the upside right here. Once we get this big impulse to the upside, so this is the earliest price data we have, so that's where we'll go from. But effectively at this point, we're assuming, well, presuming, because it's based on evidence, that we will get some sort of pullback to continue higher. Now, what we can see is this didn't happen. We basically just had one single price leg, and then price failed to push higher right here, and instead we make a new low. So we break this low right here and come to here. So at this point, we've seen a break of structure bearish. So we've seen a body close below this low. So if I draw out a line, we've got a body close right here, like the body of the candle closes below the low. So yeah, now it's about finding that pullback. So I've got one key criteria, one key criteria, and then we'll look at the other criteria as well. But the main thing is I need to see 3 candles trade in the, so for example, lower or higher than the previous candle for a pullback. So in this case, because it's bearish, I need to see 3 candles trade higher, because that will be the bearish pullback, which is a bullish price action. So here is our low. So we've got 1 candle that trades higher. I'll zoom in a little bit so it's a bit easier to see. So yeah, we've got this first candle that trades higher, we've got a second candle that trades higher, and then we've got a third candle that trades higher, being this one. So this is candle number 3, and we can see that that would be some bullish price to kind of complete our pullback. Now the other, basically, to map a pullback correctly as well, I need to see either one of the following things as well. So I need to see these 3 candles which we just talked about, and I also need to see either an internal structure break, or I need to see a retracement to the EQ of the impulse. So what I mean by both of those things, in terms of an internal structure break, that's effectively like a change of character, right? So I need to see, for a bearish, when we're looking at this bearish leg right here, I need to see a bullish change of character or a retracement to the 50%. So we can see in this case we got a bullish change of character. So we got this low. If we're looking at the internal structure, we come down, make a low, make this little inside bar high, which is a range trapped inside this previous bearish candle, and then we make another little low. So we've had, when we take out this high here, we've had a change of character. So that would be an internal structure break, and that would be valid for a pullback. The other criteria would be a retracement to the 50%. So in this case, price would have to come up to here to validate the pullback. But because we get this internal break and we've got the 3 candles that trade higher, this is enough for me to consider a pullback. Now, moving on with price, we can see that we then push down to here, but we fail to close below this low. So just remove this line. So if we go back to the first rule, I need to see a body close for breaker structure. Here we pull back, we push down, but we fail to close below this low on the left. So this is a failure to close, and the way I use them is effectively, I will kind of extend the leg out. So this was our previous leg, and I'll basically extend that out to where the failure to close is, and it becomes part of the same leg. So yeah, so we can see that when we fail to close here, we properly pull back now. This is, you know, got plenty of candles, so that completes the 3 candle pullback criteria, and it also breaks internal structure right here. So we get a change of character, we get our well-formed pullback, and we come up to this high, and that is effectively our lower high in the market on the monthly time frame before we continue to the downside. So now we have not fully printed this candle yet. We have 13 days and 8 hours left until this closes, so we could still potentially fail to close below this low. I don't know yet, but yeah, effectively if we do close, then we will have a new bearish leg of structure, which is this. So yeah, that is the core concepts of these, understanding, or well, the criteria. I will go down to the daily time frame and we'll have a look at some more price action. So right, we will start from here where COVID is, and effectively we had a big bearish leg, which what we know in, well, as I was saying before, the higher time frame is more important than the lower time frame, right? So if we go back to the monthly, we can see that we do technically tap demand right here. Of course, I like to find the engulf candle. This is kind of moving into supply and demand, but we know that there's some demand here because it breaks this high, as I pointed out. So we come down, tap into the demand on the monthly time frame, and then what we see on the daily is a rejection of that demand level down here, and then a push up. So we do break structure bearish here, but we can see it's a liquidity sweep before a push higher. Now, same again, we're just looking for that pullback. So we got our low, and we push up to this high. Now, this would not be a pullback for me. We can look at the criteria. So you need to see 3 candles trade lower in this case because we're bullish, so the pullback has to be bearish price action. So we've got, this is our first candle, and we only see 1 candle trade below that initial candle. So this would not be a pullback for me. Now we move to here, and again we can see we do actually have 3 candles here. So we've got, this is our first candle which gets traded below, second candle gets traded below, and third candle gets traded below. So that would fit that first criteria, but it doesn't break any internal structure. This would be the first little internal low that I would want to see go to validate the pullback. And the reason I wait to see the internal structure broken is it shows an amount of complexity within the pullback. So effectively, if this internal structure went on the daily, that would likely be a 4-hour break of structure bearish right here, which would effectively show me that price is willing to pull back because the lower time frame has changed structure to accommodate the pullback effectively. And it shows there's a willing amount of sellers effectively to actually pull the market back, which is, you know, that's the kind of the core fundamentals of markets, right? Sellers and buyers moving price. If they can't break any little internal structure, then I wouldn't really like to validate it as a pullback. So yeah, so this isn't a pullback, and that will bring us to here, which again doesn't break any internal structure. So this isn't a pullback, which would then take us to here. Now this is where we get something a little different. So we of course get our 3 candles. We get 1, 2, 3, so that's fine. And we can also see that we break some internal structure. So we break this little low, we break this low, and then we continue to effectively break lows on the way down, just showing that sellers have an amount of control during this pullback to actually move price a substantial amount and cause effectively a complex pullback on the daily. So yeah, so that would mean we've got this low to this high, we pull back, and we always use the lowest point before the high goes as our structure. So in this case, the high goes here, and we use this low. So now it's the exact same thing again. We're looking for our pullback. So this one, obviously it doesn't break any internal structure. Again, this breaks no internal structure and only has 2 candles. So that brings us up to here. Now we see the internal structure is broken. Well, actually, this one initially. We see, you know, multiple continued lows being broken. And yeah, this would be enough for a pullback. So now what we're assuming is basically a pullback to continue higher. Of course, we can see that isn't what happened. We actually come and break this low. So this is again due to the higher time frame. We know that the lower time frames will effectively move according to what the higher time frame is telling them. So in this case, this was our bullish structure on the daily. We came up to here, and then we tapped supply on the monthly time frame, which is, as you know, as I've said, more important than the daily. And then that's what causes the the break of structure bearish on the daily. So yeah, right. So now we're looking at the next pullback. So we got this high, always the highest point, to the low, which could potentially be this, but of course we don't have 2 candles trading higher or any internal structure broken, so that'll bring us down to here. And in this case, we do see the internal structures broken. So we've got that one break, and then, you know, these continued highs that get broken afterwards. So yeah, so effectively price, this is our high, and then we continue lower, and doing this basically it will keep you on the right side of the market effectively using these approaches. Because if you said okay, for example, let's say you don't use these criteria that I've got down here, you would potentially say, okay, now this is my low, this is a pullback, new low, a new low, pullback, low, and then price would actually turn bullish for you here. So now you'd be thinking, oh, I'm going to buy from down here. And yes, it may work for a bit. As we can see, this demand zone does, we tap back into it, get a little push. But if you were bullish on the daily time frame at this point, you'd be expecting basically tap the demand and then continue higher. But instead, we were still bearish, so we continued lower, as you can see. So yeah, again, we now have a new bearish leg and we're looking for that pullback. So we can see, if I get the tool, we break one high, break another high, and then we break another high. So that's 3 candles that have traded higher in this case, because it's a pullback of a bearish leg. And we can also see that we break internal structure, which is amazing. So yeah, this is enough for a pullback. In this case, we do actually fit the third criteria, which is, well, because you need to see either internal structure or broken or a retracement to the EQ, right, of the impulse. In this case, we broke internal structure and we traded higher than our EQ. So, you know, very well formed pullback, this one. Again, another break of structure bearish, continuing our kind of predefined or, you know, presumed objectives because we're bearish on the daily. Break structure, close below the low. Same thing again, we got multiple candles, definitely enough for a pullback here. We break some internal structure, and of course we come to much further than the 50%. We actually sweep the high here. And again, this is where I'd filter out a potential break of structure bullish. If you mapped with just wicks, you'd be saying, oh, awesome, we've changed bullish on the daily. So now my kind of main, you know, my framework is I want to go for buys down here because we've switched bullish. But instead, because this was just a sweep and we didn't close above, we still continued bearish, which was the true direction of the market. So yeah, we continue bearish. Instead of, you could still potentially look for buys down here, but of course that we wouldn't be expecting price to go off and rocket and do that, because we know that price is still bearish. So yeah, we continue down again, and here we have another pullback. Now this one is slightly different from all of the rest so far because we don't get that internal structure broken during this pullback. So we can see that we do have the 3 candles, so we got 1, 2, 3, but we don't break any internal structure in the way down. Now this does count as a pullback, and that's because it retraces to the EQ of the previous impulse. So this is our impulse down. We retrace to above the 50% right here before continuing lower. So yeah, here we go. We've got a new bearish leg. Tool. And now it's about finding, well, we actually failed to close below this low right here. So we need to see that low broken, which obviously we fully closed below here. So now we come to here, and you could potentially say this is a pullback. For me, it's not a pullback, simply due to the kind of rules that I've outlined. It does have 3 candles for the pullback. If we can see, we've got this first candle that trades higher. We've got the second one. Does that trade higher? No, not quite. But we've got yeah, this one that trades higher, and then this one. So that's the 3rd candle right there. Nice and easy, that fulfills that criteria. However, we can see that it doesn't break any internal structure or pull back to the EQ of the impulse. So the EQ is up here. We'd want it to either pull back to here or break some internal structure. Of course, the first internal structure here is actually above the EQ, so regardless, it would need to basically come above the EQ in this case. We don't see that. It just basically pauses before, zoom back out a little bit, before continuing lower. So yeah, that would again mean this is my leg of price, that's the impulse, and of course we start pulling back properly right here. So we break this internal structure, and we also come to the EQ, which is really nice, and then continue lower. So this is our current bearish leg, and yeah, that is it really. It's easily complicated, really doesn't have to be. You know, I've got effectively, well, seeing a body close for a break of structure is kind of pretty standard among most kind of supply and demand traders. But yeah, beyond that, I've basically got two rules that I need to see: either an internal structure break or retracement to the EQ, and I need to see those three candles trade lower or higher than the previous one. So yeah, we can see that basically during this whole down leg, we didn't break structure bullish at all. We just had continued bearish structure, and as I said before, there could be some potential areas where you could say we've turned bullish. So like here, you could potentially say we've turned bullish, but because of my structure rules, we just remained bearish the whole time, breaking lows, protected highs, and yeah, now we're at current price. So yeah, that's really all there is to it. And you know, it's not the most difficult thing in the world. It really isn't. It's as long as you have a predefined approach which you can apply every time without discretion, you can follow kind of the true objectives of the market. Yeah, so again, just make sure you use this. You can use this fractally. This applies. These rules apply on every time frame. You know, from the monthly, which we discussed in a decent bit of detail, all the way down to the 5 seconds. Yeah, so like, it's literally applicable across every time frame, and you can that's pretty much it, to be honest. Yeah, this video doesn't really need to be that long because it's not particularly complex. It's not rocket science. You know, if you want to use these rules or potentially change them up a little bit to suit how you want to map, but yeah, as long as you're following the same rules every time, you can't go too far wrong. So yeah, that's how to map structure, liquid state style. So I hope you guys enjoyed that, got some value. I hope this cleared up a lot of kind of structural questions. I know that this and liquidity were the two most requested topics for this video that I was going to do. So yeah, I hope that helps you guys. Have an incredible day, and I will catch you on the flip side. Nice one, guys. See you later.